Okay, what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, I've got another video for you on the fib. Now, a few people have asked me to explain how I use the fib, how to use the fib themselves, and I'll be explaining that in this video. I'll be breaking it down, showing you how I use the fib, how I implement it, and also do have some nice examples on the AUD/USD I'll walk you guys through. So make sure you do stay tuned for that. But currently today is Monday the 28th of March. Not currently in any trades, it's only 1 p.m. I've just got 1 p.m. Right now, so very, very early on in the trading week. But there are a few pairs I do have my eyes on already this week. I'll show you right now, in fact. Over here, I've got AUD/USD, and I'm looking for shorts for this pair. Now, I've already seen some downside momentum. The market kind of opened up bearish, and the market's rolling over. We're seeing some strength in the dollar right now. So I was looking for one more drive higher for a third test and then some shorts back down. So I'm expecting some retracement now for AUD/USD for this bullish trend and some downside, but you can see already leaking over. So I'm hoping we can see one more drive higher and then the rollover, but there's a chance we might leak. If that's the case, that should be a missed trade there. But I am looking for shorts for AUD/USD and also for pound as well. And as you can see, pound as well, seeing some downside there. Was looking for shorts for pound USD at this 1.32 area of resistance. We will respect this really nicely coming into the week. So I was hoping we can test it one more time and then roll over. But like I said, we're seeing a lot of dollar strength, and pound USD is falling to the downside. So I'm still looking at shorts because I still do have targets at 1.3 down here, back at the weekly low. So I'm still seeing more downside for pound USD, but I do need to see some retracement. Hopefully we can get something like this happen, some downside, maybe a push higher, and then we roll over. Then I can look to get in on the pullback, something like that. So that's what I'm hoping for pound. I'm also looking at EUR/CHF as well, looking at the market rolling over. You can see these nice lower highs forming. I'm looking at the market, seeing some more downside, looking at the higher time frames for this pair, and everything is still very, very bearish. So no real reason to be looking to long the pair just yet. So I'm still trying to stay in, with the theme of that bearish trend, and I'm looking at price coming lower. So we've had a really nice push to the upside this morning. I'm looking for a double top first just to confirm it. And then, some shorts back down again for EUR/CHF. So those are the pairs I'm mainly focused on right now, not in any current trades, but I'll see how these pairs go for the rest of the week so you can get some nice trades in them. But like I said, guys, we're going to switch on to AUD/USD, see what examples I'm talking about on that one for the fib, and I'll walk you guys through that. So let's get to it. Okay, so welcome to the chart. So on my screen right now, I've got AUD/USD. I'm going to talk you through some examples using the fib on AUD/USD on the daily time frame. But first, I want to talk you through the basics of the fib, how it works, how we're going to use it, and how we're going to trade using it as a confluence in our trading. So basics, market structure. The market's made up of highs and lows, and that's what we're going to be focusing on with the fib. So in a bullish structure, the market's trending to the upside, as you can see. Let's make that a little bit clearer for you guys. The market's trending to the upside, and we're forming higher highs and higher lows as the market's pushing higher. So as you can see, these are our highs, these are our lows, these are our highs, these are our lows, and the market is doing that to the upside. And in a bearish market, it's doing the exact opposite, forming lower lows and lower highs as it's moving to the downside. So we've got the low, the lower high, the lower low, lower high, and so on and so forth. And that market is obviously moving to the downside. Now the fib retracement tool is in the name. We're using that tool to calculate the retracement after the market's had an impulsive move. These moves here, as the market's driving higher, are our impulse phases, and this is our retracement. And we use the fib to calculate how far the market will trace before we do see that next impulsive move. Same thing with the bearish market, impulsive move to the downside, our retracement, impulsive move, our retracement. So, for example, get you the fib tool out here. This is the fib tool I use. These are my settings. If you want to, make a note of that, or pause the video, whatever. These are the Fibonacci levels that I use: 0.382, 0.5, 0.618, 0.786, got the 1 and the 0, and extensions for targets, which are the ones in kind of like magenta color, minus 0.27 and minus 0.618. So these areas here in blue are the areas where we're looking for the market to retrace to. So after that, we've got that push phase, we're looking for retracement in any one of these areas here, and then we're expecting continuations at least back to highs, and then potentially higher highs, and these are the targets where we expect those higher highs to form. Now, Fib tool is for me strictly just as confluence as for my trading. So I'm using price action, support, resistance, key levels, multi-time frame analysis in my trading, but Fib is just a tool for confluence. So I'm mainly looking to target levels that I've already identified on the time frame I'm trading, and then I'll use a Fib to add confirmation and more confluence to the decisions or the bias that I've already formed. So for example, if there's a level here which I'm expecting price to get to, and I draw the Fib out and it's also lining up with the minus 0.27, that gives me extra confluence of price actually getting to my target. Same thing for retracement. If there's a specific level I'm expecting the market to retrace into, and I draw the Fib and it also lines up, say, with the 0.618, then that gives me extra confluence that the market could come back to here and go higher. So that's all we're looking for a Fib, just looking for confluence. And then we've got multiple areas where we're looking to push into. Got the 0.382, 0.5, 0.618. It could be any one of those areas price can be traced to. Some people also have, the 0.236. For me, I would like price to retrace a little bit deeper first. So this is the first area I'm looking for price to get to before I do look for my long opportunities. So now that we understand that, we can take a look at some actual examples and how to trade it. And again, you want to be looking for confirmation, confluence, build up as much as possible to have the highest probability of the trade working out. You don't want to just buy as soon as price gets here. You want to wait for some candlestick confirmation, some chart patterns before getting involved. Double bottoms, triple bottoms, head and shoulders, break and retest, things like that you want to be looking for at these key areas. So if you look at the recent price action for AUDUSD, we'll start over here. Again, I'm using hindsight to find these examples, but it's best I show you how they actually work. Therefore, you can take this information into your practice, into your back testing, and see if it can actually work for you. But as you can see, we had a nice bullish trend here, highs and lows, highs and lows. This is our recent low forming after that high. So we take it to the high point. You want to take it after this push, you want to take your Fib to the next high point. So from the low to the next high point, you want the 1 at the bottom and the 0 at the top, and then you're looking for the retracement into these areas for the continuation. So normally before I even draw a Fib, I've already allocated to myself a level where I'm expecting price to go. So normally for me, first area is the break and retest of the high. So this is the high, break and retest. That's immediately the place where I'm looking for price to come back into. Line that up with the Fib. We also got some nice confluence with the 0.618. You can see a nice double bottom, triple bottom in this area. First, second, third test. So as you can see, this is a very, very good, strong, confirmation that price is probably going to push higher, also coming to a very strong psychological level of 0.7 as well. So that's another confluence. If you didn't go long on the double bottom, the triple bottom would have been nice. Could probably go long after that candle. And again, this is the daily time frame, but it does work across all time frames. It doesn't really matter. Higher time frames, yes, a bit more stable, a bit more, less unexpected movement, but it's the same thing across multiple time frames. And then you look for your entries on the candlestick patterns, which I've done videos on my channel. So go check that out. I'll leave links to that in the description, and also how to enter your trades. I'll leave links to that in the description as well. But for today, we're going to specifically focus on the Fib, how to use that and how to take advantage of that in our trading. So you want to be looking for the chart patterns, candlestick patterns before getting involved. And typically I normally look to trade it into the high, so the 0 back to the high, just because that gives me the highest probable area of where price could go into before maybe reversing. It doesn't have to necessarily make a higher high. Price should come into that high and obviously reverse and turn bearish. So my advice would be to take profit at this level. Yes, you can target these extensions, but do take profit as price goes for you, just in case we do get a reversal. Obviously in this case, you can see price actually did come right into that minus 0.618. I probably wouldn't have held that long, but it's up to you again. You back test that into your trading, but that's how it works. We just want to find that fib, get our chart patterns, and take advantage of those candlestick formations at our levels. Really nice confluence in that area, and simple like I just did over there. You want to be focusing on the low, which is just made, because you just made a new high now. So this is the new low, and then that area there is our new high. You can see price came up to that high, retrace for us, but I didn't have a deep enough retracement. So in this scenario, I wouldn't really be looking to trade that. You know, there's not really enough confluence there. It's not coming into my 0.382. I'll leave that alone. Yes, we did see some nice continuation, but you can see it wasn't as big as this move here. We got a deep retracement, a nice formation, a much more probable and better trade opportunity than this slight retracement, which did continue, but then price did reverse quite quickly. Didn't even get to the minus 0.27. And now, as you can see, the market's shifting bearish. We're getting some lower lows and lower highs. So if you draw it from the top into that low there, you can see we can get some more retracement into there before the continuation. And again, we always want to be drawing that level first to find where we want to be basing our trades from. And then we find out if the fib is also giving us that extra confluence. And as you can see, back into this area, very strong resistance, and we trace back into this area, back into the 0.618, bit of a fake out, as you can see with that spike there to the upside. So a bit of a fake out, but essentially we did come back to hold that area and eventually rolled over. Again, this one did come all the way to the 0.618 minus 0.618 extension. I probably would have looked to secure most of my profit at the 0 and then maybe held to the 0.27 if it lines up with a target. In this case it did, which is that prior high there on the left, lined up nicely with that minus 0.27. So I potentially would have held to this area, but probably not the minus 0.618 there. So nice confluence. As you can see, we're building up price action with levels, with structure, and then we're using that fib to give us more confidence in the trade. Same thing here, recent low form there, gonna push it to the high, and as you can, into the low, sorry. And as you can see, this time we got two-step retracement. So price gave us a bit of a bear flag here, 1, 2 before the continuation. So in this case here, you can see price came into this area, into the 0.74, so nice psychological level, and into the into the 0.38. Nice rejection. We did see a move to the downside, but again, not too much confluence in this area. It's just a fib extension. We do have this level coming across from there, which had a bit of a fake out, so it's not really that clear, to be honest. I want price to come back for the retest before dropping. But it's not very clear. The confluence is not quite there. Yes, we did get a move. It didn't actually come into the 0, came pretty close before reversing. But as you can see, for this move here, we've got a lot more confluence in this area, coming to a very key psychological level, 0.7, 0.75, 0.8, you know, very strong psychological levels. Also coming into this trend line here as well, as you can see, first, second, third point there, and also having a break and retest of this structure there. Support, now turn resistance. So we have a nice confluence there, and also just about a nice double top for us there. Got the first test, came back up for the second test, and a very strong confirmation candle there to get involved. Stop loss obviously above the area. Targets for me would be at the 0. We did have that main support there. It's not coming to the minus 0.27, so I wouldn't have pushed that trade, you know, into that area. Probably would have had it at that support, you know, and make sure with that 0, but I wouldn't have pushed it further, because this is a very key support there, and price is likely to find some support, you know, at that area and potentially reverse, which you can see it actually ended up doing. So that's what I'm saying. Fib's is always about that confluence. Find those areas in the market and use fib to give you an extra bias. But really nice signal there and a nice move to the downside. And again, if you maintain that pattern, you can see price, if I draw the fib from that low to the next, from that lower high into the low, you can see price retraced back into the 0.5. You can see a nice double top there, first test, second test, then we get a strong pattern, evening star pattern there. Bit of a head and shoulders actually, with the left head and right shoulder, and the price actually ended up falling as well. And you can see a perfect rejection of that zero double bottom forming. And as you can see throughout all the setups we've gone through, prices always, apart from this move here, has got to that zero. So you do have a high probability trade if you're looking for some retracement back to the zero. Obviously, the further it goes, the less likely price is going to get there. I'm not saying you can't target those areas, but always do take profit as price does go in your favor. The further the target is, the less likely price is obviously going to get there in general. But really nice rejection of that zero, and if you didn't exit or take profit, price would have come back into your entry price. But as you can see, we're choosing as confluence to really back up our buys. The market's already giving us lower lows and lower highs, so we're generally looking for sells in this market, and the fib will provide those extra levels where we can use, okay, we've got an extra, I don't know, 0.618 confluence, got a trend line, we've got a key level, we've got a nice candlestick pattern, double bottom, you know, whatever you're looking for in the market, just to add confluence, add a story to your trade before taking it. But I do hope that made sense. If it didn't, please leave some comments down below on the video. I'll get back to you guys if it makes sense. Any more questions, or you just wanted me to explain something further, let me know in the comments. But I did hope you enjoyed that breakdown, guys, for the fib